next guest sees some market turbulence ahead, but despite the mixed signals, he says, look, this is an economic sweet spot. Here with us is Ken Stern, president of Lido Advisors. It's great to see you. So if this is the economic sweet spot, how do we position portfolios to take advantage of that? Just smooth sailing.
Yeah, I do think that there are some headwinds, and I do think we're going to see some bumps. You can't go from 6, 7, 8% and have a linear return. Think about the return. It would be just way too high. Mike talked about a 16% return since the lows. The average is what for the last 100 years? 10%? So I think what now this rotation that we're seeing is very healthy. This is a good rotation. It's broadening out. It makes sense. And we don't know when the Feds are going to move. We don't know, but we don't think that they're going to raise rates. And if they're not going to raise rates, and we have pretty good employment right now, very good employment, I like this. I think we should hedge, though. I don't think we should be fully aggressive with our portfolio. I like a little bit of a hedge here.
Hedge for what and how?
Yeah, so some of the simplest ways to hedge and talk to your advisors, you can use options very effectively. Now to say, I want to have a little bit of downside protection. You usually give up a little bit of upside, but again, you make money by not losing money first. Have a little bit of hedge. I also like hedges by finding where the opportunities are. There's opportunity. We were just listening to a real estate expert. You know, there's a lot of credit. There's a lot of debt coming due. And not all of these speculators are going to be able to keep their portfolios and keep their real estate. They're coming due at much higher interest rates. And I think some of the opportunities in real estate makes a lot of sense right now.
But if certain sectors of real estate are going to face a debt cliff, so to speak.
Yes.
How do you differentiate between the ones that are going to be able to get through where you might want to put your money and the ones that are vulnerable to those higher rates at which they'll have to refinance?
Yeah, I think it's an opportunity to keep your powder dry and watch as this millions and billions, potentially trillions of dollars of debt refinances. And be able to be very selective with it. I like multifamily very much right now. There's not a lot of new building. You're not seeing a lot of construction. It's hard to get the banks to lend. All of that is lending to a long-term, another macro trend that makes sense. So keep your powder dry. Look at
apartment builders and REITs that do that. Is that what you're talking about?
Yes.
That's what you're talking about.
Yes. Either you can go directly into the private equity real estate, or you look at the REIT sector, which is, by the way, underperformed the broader for many of the reasons that we know. Rates have been going up.
What about, and we heard Mike talk about this briefly, but those mega cap names that we've seen so much growth coming from and where that's heading in the future?
Yeah, again, it's a positive in the fact that you have, 20 times earnings on the S&P. A lot of that is tied to that Mag 7, and it deserves growth that is associated with that. The other 493 stocks, though, don't trade at 20 times earnings. And the broadening out, I mean, we haven't talked about utilities in how long. How nice is it to get paid and have an actual, I think, approachable multiple on that index?
And it tells you where we are as a society, right? When we talk about healthcare now, we're not really talking about like what could cure cancer. It's all about weight loss drugs and Ozempic. Is that going to fuel opportunities in healthcare?
100%, because the fact of the matter is that we are in life sciences now, and we are living longer and we're living more active. That's what I call a macro trend. And when you have an opportunity to buy into that macro trend at the right multiples, again, let the market come to you. Don't chase it. But I like these entry points coming up.